So last night, or very early this morning, as it were, Congress voted on and passed its biggest fiscal package in nearly a decade. It includes new limits on how much the government can spend in the next 2 years. As a part of the deal, military spending will rise to $700 billion for fiscal year 2018, roughly 10% above current levels, and domestic spending will also get a boost to $591 billion. That, as the market seemed to be all over the place this week. Here's where the Dow closed each day this week. Twice, the Dow finished down more than 1,000 points, and once it finished up nearly 600. Today, it was up more than 300 points. So that is why we are incredibly happy to bring in Newsmax finance insider and CNBC senior contributor, Larry Kudlow. He's also the host of the Larry Kudlow Show. So, Larry.
Thank you, Kirsten.
Yes, you are the perfect person to be here on a week like this.
Okay.
So we're very glad to have you. But first, I want you to listen to a clip from your friend Jim Cramer, and then we'll get your reaction.
The people who don't know the difference between a stock and a bond are in ascendance this morning and this week. And they're telling us that everything had to do with 2.7 versus 2.8. I am telling you that what happened is a group of complete morons who traded these double and triples, who didn't know what it meant to be able to reconcile at 401, are blowing up.
All right, you're giggling. What do you think?
Jim Cramer. We were partners together every night for 3 years. He's probably the most encyclopedic stock market person I've ever seen anywhere.
Yeah. Is his analysis correct, do you think?
Well, look, it's frustrating because, you know, the VIX index goes up, the so-called fear index goes up. Everyone said it wouldn't. And then you have all these derivatives, and then you have all these algorithmic changes that are computer-driven.
Right. Talk a little bit about that, because I think that most people watching at home don't necessarily realize that so much of this is done by computers nowadays.
I mean, look, I'm not in that game directly, but these algorithms they have, they're programs, they're computer programs, so they're based on the prices of different instruments. It could be a stock, it could be a bond, it could be a derivative, it could be anything, all right? There's markets and everything. So if you bounce up or down on the price lines in the price channel, it can trigger selling. If you go outside the boundaries, and we went way outside the boundaries on the VIX. The VIX went from, I don't know, nothing, 10, 12, up to almost 50 at one point. So that triggers a lot of selling. And that's what happened today. It's not humans. It is computers. It's the world in which we live. These things happen. I just would say right at the top, the economy is very strong. The tax cut bill is really energizing business investment. Profits are very strong, and therefore the stock market's going to be just fine. There's some interest rate turbulence too, but people shouldn't panic. Folks should not panic, and stocks are going to be cheaper, and I'd buy them as they go down. I'd buy them and I'd hold them.
Yeah.
Stocks for the long run. That's always been my philosophy.
A very happy Friday message from Larry.
Warren Buffett had it right. Jeremy Siegel has it right. I've always been. I remember Buffett in 2008, I think in September of the crash, said he would buy the stock market. And he said, I may be 25% too early, but I would buy the market.
Wow.
And he was right, and he was early, but so what? And the market rebounded. The market's been doing great. Buy and hold. That's my view.
Great. So let's move to the budget bill real fast.
But I do want to mention one thing in connection with the economy. Sometimes good news in the economy is bad news for stocks because real interest rates go up. Investment returns are rising in the economy. So the stock market requires a higher real investment rate. And that's what's happening here. The real rate, you buy them and sell them, the TIPS, Treasury, inflation, protected securities, real rate's gone up about I think 50 basis points. Most of it is real, a tiny bit of it's inflation. That's what spooked the stock market. Rates have not yet peaked, so there's a little bit left to do.
Yeah, good. Well, thank you for that insight. Very reassuring. I want to get your take on the budget deal. So we had, Congressman Trey Gowdy talking about it earlier. $300 billion it's adding to the deficit. Now, as someone who is, helped so much with tax reform. Obviously, that added so much to the deficit. So how can you have tax cuts and a major spending bill? How do you? I'm curious to get your take on this.
Look, I think the president's right. We need more defense and military investment. We do. I think he's dead right on that. And a lot of that stuff's going to go towards the anti-ballistic missile systems, all right, which we need, North Korea and so forth and so on. I'm sorry that they weren't able to cut back on domestic spending, particularly the non-entitlement programs. The original Trump-Mulvaney budget cut back. They didn't have the votes to get it through. They had to compromise. The Democrats insisted that whatever we spent on military had to be also spent on domestic. Yeah. That's a lousy deal. And I think there's a lot of reforms that need to be done. I don't think it's a catastrophe, but I think you've got to have a stronger budget outlook. It's not so much deficits, it's spending.
Right.
We spend too much.
Right.
And some of the spending is good. You know, spending on Social Security is good. Right. Spending on missile defense systems is good. Spending on a lot of frivolous programs is not good. Way too much spending on places like food stamps and unemployment insurance. So that stuff should be curbed. We need incentives to work. It's a lengthy thing. I was once a deputy at OMB under Ronald Reagan. I know a lot about the budget. It takes us a long time. But are we spending too much? Yeah, we are, particularly on the domestic side.
Yeah. So last bit, your book in 2016, JFK and the Reagan Revolution, talked a lot about how JFK, in fact, slashed tax rates. What's the one lesson from writing that book that you would want to impart to President Trump?
Well, look, as I helped with Steve Moore on the tax cuts with candidate Trump and President Trump. You know, JFK, the Democrat.
Yes.
I mean, I would like Democrats to read our book.
There you go.
Because they've lost the tax-cutting legacy and the pro-growth legacy of the great John F. Kennedy. So we're trying to put some history into that and remind them of that. And young Kennedy, House member, whatever his name, Joseph Kennedy III was his name?
Yes.
He's on the air railing about business and rich people. Please, his great uncle, read our book and you'll see how his great uncle had a completely different story.